How to make it easier to get loans from banks, coming up. Hi everyone, this is Ernesto from AttaBoyCowBoy, and on this channel we give you health and wealth tips to help you be more successful. Now today I want to talk about how to get money from banks. A lot of people wonder, how do you get money from banks? It's so hard. I have to save up all this money. I want to buy a house, but I don't think I could save up the down payment and all this kind of stuff. It's actually really simple. You just have to reframe it. You have to look at things a different way. The important thing about getting loans and getting money from banks is you have to look at it like dating. Let's say you want to go on a date and I'm looking for a date. I'm not going to go out with the girl that's least attractive, that doesn't comb her hair, their clothes are dirty, has stains on her clothes, maybe hasn't taken a shower in a few days. That's not very attractive. So I'm going to go for the girl that's hot, that looks nice, that fixes her hair, puts nice clothes on, maybe works out a little bit, takes good care of herself. That's much more attractive. It's the same for women. They want a guy that looks good. They don't want some guy that's all beat up looking and doesn't wear nice clothes and doesn't take a shower, maybe doesn't brush his teeth. That's very unattractive. So you're not going to have very much success that way. So I want you to look at personal finance in a more subjective way. I know it's very quantitative. When you look at, there's all these numbers and interest rates and it looks like a big math problem, but it's not. It's very subjective. Remember, at the end of the day, everything has humans involved in it, and there's emotions. And you got your banker, you got your lender, you got your mortgage lender. These guys are looking at your application, or girls, or they're looking at you, and they want to see how attractive you are to lend you money. Now, obviously, they don't want to lend money to losers. They don't want you to lose their money. They don't want you to default. They get in trouble. They get written up. They get fired if they make bad loans, right? The banks will go bankrupt. They want to lend money to people that are going to pay the interest and pay them back, so they can make their profit. So remember, it's a business. They don't want to make bad debts. So what do they look at? They look at behaviors. They look at how attractive you look on papers. Number one, of course, is you want to have good credit. Never be late on anything. Even if it's like $5 or whatever, just pay everything. Pay your debts off. You don't have to pay them off, but you don't want to be late on your payments. That's a big deal. Also, you want to build your credit. A lot of people are afraid. They're like, oh, I don't want too much credit. I don't want to get too many credit cards. That's not the way to look at it. You need to have credit. They want to look at credit history. They look at you on paper. They want to see how responsible you are. So get as many credit cards as you can and use them. Of course, don't go out and consume. Don't buy bad debt. Don't buy like shoes and expensive jackets and all that. No. Get a bunch of credit cards, as many as you can, because that builds your available credit. Now, let's say you have one credit card with a $10,000 limit and you spend $1,000. That means you use 10% of your credit. Your debt to credit ratio is 10%. You spend 10%. But if you have $100,000 of available credit on different cards and you spend $1,000, that means you only spend 1%. Your debt ratio is only 1%. That looks a lot more attractive. See where I'm going? That's why you want to get as many credit cards as you can, because in the banks, you're getting a loan, they say, hey, look, this person has $100,000 in available credit on the credit cards. That means that all these other banks trusted this person. And that means he's probably had a really good history. And that's why they keep issuing this person credit cards. So you want to get as many credit cards as you can. Don't just get one credit card. Some people tell me, oh, I don't want to get too many because I don't want to spend too much. Well, don't spend too much. Just get the cards and use them. Use them every month. You can show a record, like a history of you using them and paying the debt off. You don't have to go out and buy stuff. Pay your gasoline, buy your lunch, pay your water bill. You see what I'm saying? Just pay for things you normally would pay, but use a different card every time. I go buy groceries, I use this card. I go buy stuff in my car, I use this card. And then I make payments like every week to boost my credit score. That's a simple way. It's a hack to build up your credit score. That's in my credit book. You can read more details on that. But anyway, the most important thing is your credit. Now, second thing is they want to see that you know how to manage money. So open some investment accounts. Put money in your 401k, put money in your IRA. Then they say, oh, okay, this person is a little more sophisticated. They know about personal finance, which very little people actually do. He's an investor or she's an investor. Maybe you don't have a lot of money. You're like, say, I don't have 7,000 or 6,000 to put in my account, my IRA. Well, put $100, put $50, whatever you can. You can just keep doing little by little. But now you have an account open. It's like a separate bank account or a separate credit line, and it shows a history. Say, oh, this guy's been investing for 5 years or 10 years. That's really important. Building that history of having those investment accounts. Of course, the amount that you have in there is good also, but the history is really important. It shows that you're sophisticated and you know what you're doing. It's like putting lipstick on before a date. Putting lipstick on is going to go a long ways. So open those investment accounts, put some money in them, just keep putting a little bit, whatever you can, $20, so you can have that longer history on those accounts. The other thing is, they want to see what you're spending your money on. They don't want you buying junk. They're going to look at you on paper. They're going to say, okay, this person makes $1,000 a month, but he has a $300 car payment. They're going to say, this guy or girl doesn't know how to manage their money. Why are they buying such an expensive car if they only make $1,000? So whatever you make, the banks subtract all your debts from that, and that's what they decide how much they're going to lend you. I'll give you a simple example. Let's say you make $1,000 a month, but you have a $300 car payment. Then of course you have to live, you have to pay rent, all this. So at the end of the month, you have $300 left. So they're going to say, okay, this person can only afford $300 to buy a house. Well, that house payment, we'll just use a hypothetical, might be $450. So you're going to miss out because you have all this debt you have to pay every month. Of course, you can't get around rent, you can't get around buying food, stuff like that. But maybe you can get a house that's not as expensive to rent. Instead of buying a new car, buy a used car that you can pay off or that has a much smaller payment. So it's going to take less of that monthly income you have away. It's going to allow for more of a payment, so that way you can buy houses. So that's really important, that you manage your debt well. Don't get into too much debt so it doesn't lower your monthly income. Build your credit. Don't buy a bunch of garbage that's going to be on your credit report or take away from your monthly income. And invest your money. Show that you know what you're doing, because they want to say, okay, we're going to give this person a 30-year loan for a house. Are they going to be able to manage those payments for 30 years? Or are they going to be a pain in our backside and be late all the time and default and get foreclosed on? Banks do not want that. They don't want to waste your time. They just want their money. They want to move on to the next person. So if you show a history, they're going to want to lend you money and say, okay, this person is responsible. They see a bunch of bad debts, they're going to say, no, this person's not responsible. If they can't manage their Netflix account and they're in collections, why would I give them a loan to buy a $300 or $500 or $1 million house? There's no way. They can't handle it. So I want you to look at it from the perspective of the bank, the person over there that's evaluating you. They're looking at you if you're an attractive mate, and they're gonna want to go out with you if you make yourself look attractive. So thank you for listening. And if you have any questions, please comment below. Thank you.